Hey everybody, this is James with wstrades.com. I want to bring you an update here on CLOV or Clover Health. I found an article here on investorplace.com and it says Clover Health stock will drop as the company burns money. As one of the most widely followed SPAC offerings this year, Clover Health has not exactly set the world on fire. After debuting on January 8th, the stock has mostly drifted downward with the exception of a short-term trading boost earlier this summer. CLOV stock currently has a $3.4 billion market capitalization and $412 million in revenue in its most recent quarter. The company claims to have approximately 129,000 lives under management. Clover Health is a Medicare Advantage insurance company that was founded in 2014. It offers insurance through its technology platform called Clover Assistant. The company uses its proprietary software platform to collect, structure, and analyze health and behavioral data to lower costs for patients and customers. The value of CLOV stock. Today, about 24 million of the 62 million Medicare beneficiaries are enrolled in some type of Medicare Advantage plan. The U.S. Census Bureau calls the 2030s a transformative decade for the U.S. population, with the population over 65 estimated to reach 77 million by 2034. It's a very large potential market, and capturing even a small amount of market share could lead to a profitable and growing business model if medical costs are kept under control. The all-important medical care ratio came in at 111% during Clover's second quarter. MCR is essentially the gross profit ratio for healthcare insurance companies. The company claims that the direct COVID-19 related costs and excess utilization due to COVID-19 accounted for 8.2% of its MCR, and therefore the ratio is abnormally high. The Delta variant was and is prevalent in the third quarter, so COVID-19 costs should also be, and perhaps normal, in quarter three. Further, COVID-19 healthcare issues include hospitalization and deaths will likely be with us forever as we learn to live with it. So perhaps COVID-19 costs should always be included in the normalized MCR going forward. Clover Health also updated its 2021 guidance. This includes total revenues in the range of $1.4 billion to $1.5 billion, consisting of about $775 million on Medicare Advantage revenues and Medicare Direct Contracting revenues of approximately $675 million. MA membership is expected to be in the range of 68,000 to 70,000 by the end of this year. Normalized adjusted non-EBITDA is expected to exceed $200 million in losses. It is often a red flag when a company expects investors to rely on something that is adjusted or normalized, and of course, eventually, non-GAAP. As of the second quarter, the company had $630 million in cash and investments on the balance sheet. Total liabilities were $901 million against total assets of $1.2 billion. The net loss for the first 6 months of 2021 was approximately $366 million. If this carries on the remainder of the year, half of Clover Health's cash positions will be eaten away. There will almost certainly be a burn rate in 2022. How much, though? It is hard to determine. The factors involved in such a complex, regulated, medically driven type business, along with a relatively new business model, makes accurate forecasts very difficult. One of the bothersome things about the company, in my humble opinion, is the use of the word obvious. The company loves to call itself the obvious choice for Medicare eligible consumers in SEC filings and elsewhere. This refers to the company's belief that there are only reasonable choice for the elderly to go when selecting a Medicare Advantage plan due to their plan's low cost, choice of provider, and the Clover Assistant AI technology. Putting aside the apparent corporate arrogance of that obvious belief statement, which is insulting to the elderly who choose another company, this sort of language is unsurprising from a SPAC sponsored by Chamath. He has been noted often for his pompous and hype-driven style of doing business and investing. It's somewhat pointless to attempt to derive a fair value calculation for CLOV stock because it is highly unlikely that they will have to access the capital markets next year sometime. So it may be best to wait and see what type of dilution occurs when that happens. I'll stick to the ongoing theme by many investment commentators and analysts that most SPACs associated with Chamath are bad deals and will likely go nowhere. He already has his money, but long-term investors may not get theirs. My target price for CLOV stock is 0 or very close to it. Let's take a look at some actual price action here on CLOV or Clover Health. Dead flat on the day. I believe they are at a very important price point here and a longer term support level. You can see this line that I've drawn out. They pretty much respected it going back several months. You can see in July came down and touched it, rallied above, hovering above it, and then just dipped below it a little bit here in mid-August, and then it rallied right above it again. So it looks to me like this thing is probably going to rebound a little bit and try and go test this 21-day exponential moving average here. I believe that if the price continues to sell off below where it's at right now and it closes below this line, that we could be going down to see a 650 level. In the short term, I would expect this thing to be kind of cyclical and try to pump back up. You can see right here, they made a recent crazy rally up to over $11, and then it just was a straight sell-off right from there. So I'll continue to keep you guys updated on CLOV or Clover Health. Please like this video. Please also subscribe to the channel. If you're not subscribed, hit that notification bell. Appreciate you guys for taking the time to watch this. Talk to you soon.